Welcome to the Facts versus Feelings podcast. I'm your host, Ryan Detrick, and I'm joined by my co-host, Sonu Varghese.
Cutting through the noise in 30 minutes each week with Ryan Detrick, Chief Market Strategist, and Sonu Varghese, VP Global Macro Strategist. Taking out the boring and helping investors focus on what really matters. A quick note before we start the show. Investment advisory services offered through CWM LLC, an SEC registered investment advisor. Carson Partners, a division of CWM LLC, is a nationwide partnership of advisors.
And we are back, episode 138 of Carson's Facts versus Feelings. Ryan and Sonu. Sonu, this week's titled, Why Bulls Love Tacos.
I copied this from somebody else that, the first, there was another economist I followed, and she said, the first rule of the taco trade is you do not talk about the taco trade. But we're going to talk about it anyway. We're going to talk about food.
I had no idea we were going to go there, but an interesting thing about me that, you think about something I've never said that most people would probably be surprised to hear. And I'm going to tell you and all the listeners right now.
Okay.
I have never seen Fight Club. It looks like a movie I'd like. It's a famous movie. First rule of Fight Club. Don't talk about Fight Club. I know that part. And actually, I know the ending because I've seen it. But then I just saw it came out like on Max or something. I said, you know what? Maybe I'm going to watch Fight Club. I said this to myself last night. It's kind of funny. You brought up the famous line from Fight Club about don't talk about it. Anyway. All right. So what is your favorite taco? Who's your favorite taco place, Sonu? Since we're talking tacos today.
Oh, there's this place in Chicago. My wife introduced me to it.
Mm-hmm.
It's called Tepelcates. I think I'm saying it right. But it's not far from where I am. Next time you're in town, we'll go there. We'll grab maybe that can be lunch number one, and before we go out for lunch number two, we'll get 3 tacos. But so I was craving tacos after all the taco talk last week. Literally the whole week, every other talking about tacos. So I was like, kids, you know what we're going to do for dinner on Friday night? We're going to get tacos, right? We go there. Yep. They have pretty exotic tacos as well. I got an octopus taco, which, by the way, my daughter, she's 8 years old. You don't associate 8-year-old girls with loving octopus tacos, right? But she loves it. Octopus tacos, shrimp tacos. The beef is spectacular as well. Come on to Chicago. That's yet another excuse for you to come and see.
Well, that sounds wonderful. Living in Charlotte like I did for 6 years, Paco's Tacos was my favorite. That's an excellent place. But let's get into it. So let's just start there, shall we? Rip the Band-Aid off. What does tacos stand for, first off? If you're living under a rock, believe me, I'm pretty sure everybody knows. And why is the market just talking about tacos for the last 6-7 days?
So, Trump always chickens out is the taco trade. I don't know who coined it. I first read about
Financial
it.
Times. Financial Times.
It's the Financial Times.
I don't know who author, but congrats to the author who did it because he's now famous. But it was Financial Times a while ago.
And
actually.
Trust Wall Street or Financial Times is part of Wall Street anyway. Or maybe, they're based in London. Whatever. Yep. So, trust Wall Street to come up with these cute acronyms. We got the BRICS and, tacos and all sorts of things, right? But what was funny is, speaking of the first rule of the taco trade is not to talk about tacos. It's everyone is talking about this. And then the question is, when would Trump learn about this, right?
Yeah.
And of course, some reporter, all of us probably on Wall Street are please don't ask him this. Please don't ask him this, right? And some reporter asked her, have you heard about what Wall Street's talking about, the taco trade? And Trump, and she mentioned what it is. And Trump didn't hear her. He's kicked out? Right. He's no. Chickens out, and he went on a riff, right? And then what do we see? The next day, we get China's not complying with us, right? And, we get 50% tariffs on steel and aluminum over the weekend. Thank you, people, for telling Trump that. Like I said, let's not talk about the taco trade, but we can do.
Well, exactly. And listen, it's never as clear cut as this, obviously. Yeah. But there's some of the negotiation factor. But we just came off one of the best months we've ever seen. S&P up over 6%, the best month of return since November 23, and the best month of May in 35 years, 1990. And I remember 1990 because my Cincinnati Reds won a World Series, so I know that was a very, very long time ago. But Sonu, they say the taco trade is one of the reasons. I think the other is the economy's hung in there. And I think, and then we just had a really, really good earnings season. S&P 500 earnings were in fact set up over 13% year over year on March 31st, the start of earnings season, expected to be about 6.5%. So it literally came in double that. The Mag 7, got to give them credit. They're up like 28% year over year. The what is that? The 493 are like about 9.5% earnings growth. So the Mag 7 stepped up. Earnings, the economy, maybe a little taco trade. Those, and by the way, a historically oversold market that was about as bearish as you possibly could get. We talked about on this very podcast repeatedly, starting around the third week of April, saying why the lows were likely in. People didn't like that call, and now I think it's fairly safe. Unless we have some bad tacos, the lows are likely in. Well, any other reasons we had that historic jump in May?
No, I think partly with the taco trade, it's almost as if things will just go back to normal, but. That's not the case, is it? Like if you go back to the beginning of the year, and we'll talk about the court ruling and a few other acronyms with respect to trade and tariffs. But if you go back to the beginning of the year, U.S. average effective tariffs are about 2.5%.
Okay.
Right. After all this is said and done, I don't know when that's going to be. It may be 6 months from now, it may be 3 years from now, or maybe 6 years from now. Whenever.
Who knows? The
average effective U.S. tariff rate will probably be, let's say, 15 to 20%. That's a big increase, right? Yeah. Now, hopefully, again, this is a hope, but I think this is the case. It's not going to be 40 or 50%, right? Now, that would be crazy. And I think what this taco trade, if you could call it, it's not like everything's going back to 2.5% average effective tariff rates, right? We're going to be somewhere between 10 to 20%, maybe closer to 15 to 20%. But still, tariffs are a tax. That's a drag in and of itself. But there are other things, like you said, pushing against that narrative and even against that reality, right? Tariffs coming into place is a reality. It's not just a narrative anymore. People are paying tariffs. We'll talk about the court ruling again. But we have a big fiscal package working its way through Congress.
Yep.
More deficits. We can talk about the other side of more deficits, interest rates, things like that. But deficits add to profits, right? If you get a $3-4 trillion deficit bill, if U.S. deficits are 6.5%, 7%, sorry, we are not getting a recession anytime soon, right? Like, I'm not saying things are hunky-dory, things are fantastic or anything like that. It's just that we just, the onus is on the data to tell us we are in a big slowdown or we are in a recession. We haven't seen any signs of that yet.
No, I mean, there's cracks. I mean, the housing market, housing, there are clearly cracks. I saw CEO confidence had like its largest monthly drop in history. But then you got to say, was that kind of before some of these other tacos
I saw Jamie
Dimon.
Jamie Dimon is out there again.
Jamie Dimon. Yeah, he's
sorry. I mean, he's a great CEO, but every time like economic hurricanes, and now he's like interest rates will go to 5%, and you're like, maybe we should buy the long-term treasury.
Yeah, he's.
But anyway, speaking of, you and I have talked about this in the past. CEOs are like, everything sucks, but our company is doing well because of us. If things suck, it's because of everybody else. The macroeconomic environment is really bad. See, tariffs, right?
Right.
But now I feel like tariffs are almost giving them an excuse to do what they've already wanted to do. So by the end of this, don't even be surprised if margins are even higher than they have been, right? Because they'll be like, see, we're boosting our margins, but prices are rising. That's Trump's fault. That's tariffs, right? It's not like we want to make profits, but we saw that in 2022. A year from now, I wouldn't be surprised if that's the case again.
Interesting. We also saw consumer confidence, the Conference Board consumer confidence recently, and a huge jump in that one, whereas CEOs were more bearish. But again, I think some of it could simply be the time. Like, what are the latest headlines and what's the latest with trade? And could that be some of it? One thing I do want to point out, Josh, I'll send this to you here in a second. But again, what happens after a big monthly return? Well, I looked, Sonu, at all the times we gained at least 5% in any particular month and what happened next. 1 year later, S&P 500 is higher 84% of the time. Remember, usually higher about 3 out of 4. So even the stronger returns. And the average return is close to 14% on average. So better than an average year and more likely to be higher. But here's what gets real interesting. The month of May, out of all 12 months, it turns out is the most bullish returns after it has a big monthly 5% gain or more. 6 times, relatively small sample size, but still we're going to talk about it. 6 times it's happened. A year later, S&P higher. 6 times. up an average of close to 20% on average. You always know, well, we've heard sell in May, go away. We pushed back against that 4 or 5 weeks ago. May now has been higher, 12 of the last 13 years. And the most recent one was the best in 35 years. So if you were thinking red, black, and you were going to bet against it, that didn't work. You got double zeros on this one. It did not work this time. But the reality, again, is the strength we saw in May, to me, is just a further confirmation that this is, I think, a global bull market. I look around the globe. I see Africa breaking out. I see Germany at all-time highs. I see Italy close all-time highs. France close all-time highs. Canada all-time highs. Israel at all-time highs. 52-week highs all over the Middle East. I mean, the U.S. and I guess India, are probably about the two that aren't at all-time highs yet. I just think it's going to be awfully hard for them not to join the party. Not saying that maybe the rest of the world doesn't continue to kind of lead. Maybe the U.S. does lag this year. But from a return basis, I think and again, the time we're doing this, we're like 3 or 4% from all-time high. It's not like we're that far away. I think the U.S. continues to follow the globe in a global bull market. And you on carsongroup.com/research just put together a great blog that should be live by the time we talk about this. You talked about some of these concepts of the globe and the opportunity around the globe. You want to talk about your blog or anything you found?
Yeah. And like our friend JC Peretz has been talking about this, right? I mean, you don't have to focus just on U.S. markets.
Right.
There are, it's a global equity market and global stock markets are booming. Like if you just take, this is U.S. dollar returns, right? Mexico. By the way, Mexico is supposed to get really hard hit by tariffs, right? Emerging markets. Mexico's up 28%.
Really good tacos down in Mexico.
You just have to say it. No, first 5 months of the year, 28%. The S&P 500 is up 1.1%. Right?
Okay.
The emerging, the European Monetary Union, so Europe, basically, the Euro area, up 25% year to date. South Africa, 24%. Now, gold has probably a big part to do with that. Chile, 24%. Copper probably has a big thing to do with that. Brazil up 20%. Switzerland, 19%, right? Korea, 18%. Now, India is up 3%. Taiwan is up less than 1%, like the U.S. I think Taiwan, part of it is a big part of Taiwan is TSMC, semiconductor chip company that's gotten hurt. Tariffs news, all sorts of things, right? Of course, U.S. tech companies have also been hurt. And I think one of our advisors, shout out to, I think it was Lenny. Hopefully I'm shouting out the right
we'll
person.
give Lenny a shout out anyway.
Lenny
either way.
Yeah, he asked a good question, is it just because of the dollar, right? The dollar is weakened. And when you, all those returns I just coded, and I'll put the chart up, Josh, as well. There's a table for index returns showing year to date through May 31st. So what I coded was US dollar-based returns, right? And now when you, as an American investor, investing in US dollars, when you invest in foreign stocks, if the dollar goes up, that's a headwind, right? If the dollar goes down, like it has this year, that's a tailwind, right? But still, it's not just about the dollar going down. The dollar is down about 10% from its January peak or so.
Okay.
But even if you look at local currency returns, right? Like I said, the S&P 500 is up 1.1%. So that's local to us, right? Mexico is up 20%. Europe is up 14%. South Africa is up 19%. Chile is up 19%. Brazil's up 13%. China is supposed to get hit by tariffs, right? Up 14% local currency returns. And now India's up 3%. Taiwan's down 8%. But those are the only two countries that have been struggling. But there's a theme there. These are the countries, India, Taiwan, the US, that have been doing well over the last several years. Now it's time for things to shift a little bit. Yeah. But going back to what I wrote about, that's a global, bull market.
No, I think that's great. It's a great point, because what we hear all the time is, well, the S&P's flat the last 5 months. I guess it didn't feel flat if you lived it the last 5 months. But the reality, again, we gained over 70% the 2 years before, 20% back to back. I don't think it's that abnormal to say that you're going to catch your breath a little bit and the baton's passed around. But it's really nice that the baton was passed to other countries that are doing really well. So again, the lifeblood of a bull market is passing the baton around, whether it be sectors or countries or different stuff like that. And that's what we've seen. And honestly, maybe the U.S. can take that baton back, if we get some better news on trade. What else you want to talk about?
Maybe I'll connect that back. One last thing about the taco trade. We won't talk about this again, I promise. But maybe.
I don't promise anything.
We can't guarantee anything in this business, by the way. True. So, but look, the taco trade is, things will go back to normal. But the reality is no, right? Again, we'll talk about the court rulings and things like that. And U.S. average tariff rates, like I said, are going to be higher. So it's not like it's going back to 2% or let alone zero, right? And we know that this tariff tax is going to be paid. It's already being paid. If you look at the data by U.S. businesses, it's going to, for now, it's a hit to margins and consumers via goods inflation. We've seen goods inflation go up, over the last few months. Interest rates are also higher, and that's mostly normalization, but there's also some tariff uncertainty and inflation uncertainty creeping up into that. Won't get into the details. But look, what happened when we came into this year? You saw that famous Economist cover, right? The dollar bill was shooting up in the air. Josh,
$100 bill.
$100. Ben Franklin is going up, right? So, but, that was a narrative as we got into, 2025. The U.S. economy is going to run at 3% GDP growth, and that's why you have dollar strength. Yet another year where the U.S. outperforms, and now the entire narrative is shift. And look, at the end of the day, this is about expectations, right? If U.S. growth expectations shift down, doesn't have to be a recession. It just has to go from, say, 3% growth to 2%. And then expectations for growth everywhere else in the world, again, it doesn't, given how bad things were, like especially in Europe, it just has to go from, let's say, 0 to 1 and 1.5%, right? We could see dollar weakness. That's potential outperformance for international stocks. I mean, again, I want to be clear. I'm not saying the U.S. economy will go into recession or underperform. It's just our expectations have shifted, right? So the dollar's shifted. And I think, this could have more room to run.
Yeah. At the start of this year, when you do lots of presentations and webinars and live TV and all that stuff, I remember that I was asked, what's one of the bigger surprises that could happen this year? Because we were kind of bullish. Everybody felt like they were bullish all of a sudden. So that wasn't really a shock. And I remember saying the US dollar might be weak. And it's like, obviously now, trust me, 5-6 months ago, that was not, it was universal. The dollar had one way to go, and that was up. I remember talking on this very podcast about, everyone's thinking alike. Someone isn't thinking. There's a lot priced in here. Maybe that dollar goes lower. And I saw some headlines. I didn't verify it with my own data, but I'm sure it's correct. The U.S. dollar, the first 5 months of the year, is its worst start ever. Okay, this is like the worst start to a year. A long way to go, and
it's down 9%.
And that's one of the reasons in Carson Invest Research Team, we talked about maybe the rest of the globe does do a little bit better, and the money that we run for our Carson partners and their clients. If you look at the world of RIAs, we probably have one of the larger, pockets, if you will, developed international outside of a lot of RAs. We had gold in our models for the first time. We added gold back in April 2023. Now we've kind of tinkered here, sold a little, added a little here and there. We've had a core, part of gold in our model since then, and a big part coming into this year. I said, well, maybe gold does well because historically a weak dollar is better for gold. Gold's obviously had a huge year. So those are some of the big macro things that we think about all the time, and talk to our partners all the time, and the money we run for our partners and our clients all the time. And as a result, we came into this year extremely overweight equities. You'd say to yourself, if you're extremely overweight equities this year, you must be getting beat up pretty badly. But we've made some changes as the year moved on. If the information
and
changes,
this is even before Liberation Day.
Back on March 3rd, I know we took a good amount of equity risk off. But again, what if the information changes? I changed my opinion. What do you do, sir? The famous quote. That's kind of how we do it around here. And if the information changes, we'll talk about it. A lot of times on this very podcast is how the sausage is made. What else do you want to talk about that I just said there? Or you want to go a different angle here?
Seg on that in terms, and we can come up to the tariffs and court ruling and things like that. Joy, I know, like fun thing to talk about. But no, look, in terms of information changing, I wrote about this back in March, right? Early March, Germany made some big fiscal policy announcements. That was a potential game changer. Again, talking about expectation shifting. I think that's one thing the tariffs have done, right? It's pushed the rest of the world to get its act together. Saying that, in a way, just don't depend on the U.S. to, for you to produce stuff and sell to Americans. Try to produce stuff and try to consume some of it by yourself. I mean, that ultimately, I'm not saying I'm in favor of 145% tariffs or anything like that, but I get what the administration is trying to do when they say, you know what, we don't want such large trade deficits. Now, because of, how they implemented policy, the trade deficit actually has gone up a lot. Now it's come back down, but still the trade deficit's not going to shift as much. But I get the argument, right? I have some sympathy for that argument too. But if the rest of the world is starting to get its act together, like I said, it's about expectations. Suddenly, instead of 0% growth in Europe, you're going to 1.5, or even 2%. It's like, wait a minute.
Yeah.
You could see some capital flows there and some outperformance there. So, and we've shifted as a result of that. I mean, last 2 years, we were heavily overweight U.S. equities.
Right.
right? And through the course of the first 3.5 months of this year, we've shifted to a neutral position across US and international stocks, right? So at least relative to a benchmark, right? And it's mostly happened before Liberation Day as well. If not all of it, I think happened before Liberation Day. Again, we're not ready to go to an international equity overweight. Let me be clear. That's not what we're saying, right? We still like the dynamism of US companies. I wrote about this in the blog today. You and I talked to Dan Ives last week on the podcast talking about AI. The US is still a leader there. US tech companies are still leading there. China's not, not where the US is with respect to all of this stuff, right? And I think that's why we're not ready to underweight the US yet. But, there's a lot of uncertainty and we're neutral. International versus US, there's opportunities across the globe.
Well, when in doubt, diversify it out.
There you go.
Grant Engelbart on our team. I don't know if he came up with that, but he's the first person I heard say it a while ago. And
we'll give it to him.
Yeah, we'll give it to Grant. And in this world, being a little overweight equities makes sense, but having a diversified basket of equities, specifically other parts of the globe, make a lot of sense right now. If you want to hear the latest from us, don't forget to subscribe to our podcast. You can also leave a review. We love your feedback. Also an email. Facts versus Feelings versus is VS, Facts versus Feelings at carsongroup.com. And shout out to Larry and Denise Sprung. I'm wearing my shirt here from Larry and Denise. It's like reversed for me. Let's see here. What did you do today that brought you joy? I'm literally looking at it. Looking at it on my screen. It's like backwards, but yeah. So thank you to Larry.
So what did you do today? I'm going to put the question to you. What did you do today?
Well, today, jeez.
Well, I know put you on the spot there.
in a little bit, on CNBC. This will bring me joy, assuming I don't get bumped. Closing bell with Scott Wapner, and Judge can be a tough interview, but he knows we've been bullish, and maybe he'll be a little nicer to me. I did a podcast. I won't say who, but it's a big name that'll be coming out soon. We'll share. That was kind of fun. He just reached out. It's just neat the way this world is connected, where different people, like big names, like really people with literally millions of followers, see the stuff that you and I are doing, and they like it. And
for that.
Yeah, and he's like, "Hey, you want to come on my podcast 15 minutes?" I'm like, "Yeah, let's do that." So I did that right before this. So that brought some some joy, if you will. So I
thought you were going to say tacos, but
no, I haven't had any yet. I haven't had any tacos yet. It's early. I will say this though. We'll just take a little break, a little rant. My daughter bought a new toaster for my wife for Mother's Day. Now, looking back, she probably bought it for herself. Now, listen, toasters. I grew up for a long time. You put the bread in, you push the thing down, and you just kind of wait.
Wait, is this one of those internet things?
Sonu, I can't use it. Like, I do not know. It does bagels. It does bread. It does wheat bread. I'm like, what's the difference between bread and wheat bread? I don't even know.
What is the difference between
apparently there's there's like 7 different things. I can't figure out how to do it. It's got all these different settings. I cooked something the other day. It only cooked half this one side of it because I didn't push the right button.
Because you set it to wheat as opposed to white bread.
I don't know. I'm like, listen, I love technology and making life easier and productivity, but this new toaster has made me so unproductive. I'm so flustered about the whole thing, but everyone in my family is like, "Dad, it's easy to use. Dad, you don't know what you're doing." Like, all right, anyway.
You should take advantage of that and tell, "Hey, kids, can you make my breakfast for me now?"
Oh, I don't know about that.
You probably wouldn't eat.
No, I don't trust them. But anyway, so that's so be careful out there, everybody. If you buy a new toaster, there are some really high-level I know it sounds crazy, but there really are some high-level toasters out there. So let's talk about your hat on the YouTube channel. You've got a hat. Let's talk about that for a second here.
I know this is so Carson. Every time we have one of these, we had Partner Summit with 2 weeks ago, which was where we interviewed Dan Ives live on stage. Yep. And so Carson does this thing where usually you can sort of make, or I don't know, make is the right word, but you can sort of design your own gear. Mm-hmm. So I've done a vest, one of those finance bro vests. I did that. You can make it your own color. I could have gotten like yellow and red, like Dan Ives, or yellow and pink. But I went for a straight old black and dark blue, and that's what I usually wear. But this time I got a hat and it's got a Carson logo. You can't see it. Yeah, it's too bright, but it's a bull and a bear. It's a bull and a bear. Yeah. Mm-hmm. It's like I should have gotten tacos versus tofus or something, but I can't resist. Sorry.
And now someone might say, "Well, Ryan, where's your hat?" I didn't do it again. Every year, I never see this. Apparently, I'm off talking or doing something. I don't know, but I said next year, whenever we have an event that does it, Sonu's job is to make sure I go get the free swag. I love free swag.
I'll just get one. Yeah, I'll just
make one for me. That's true. Just make one for me. I'll wear whatever. But anyway, I felt disappointed. I missed it again, and it was at the
Luminarium.
Yeah, I was
there. Luminarium in Omaha.
Yeah, I was there. I was there. I don't know how I missed it. I don't know. Anyway.
It's funny. I walk in and there's this line. I joke to, I grew up in the Middle East, India, and people don't form lines in India. Like you just, like if you're waiting to buy a bus ticket, train ticket, whatever, people just congregate around the edge. It's chaos. It's a nightmare.
Wow. Okay.
Over here, everyone just automatically a line forms. It's like magic in America. People are so well behaved. And same thing, as soon as I walk into the Luminarium, there's a line. And it's like, what do you do if you're in America and you see a line? You stand in line.
You get in line.
and I got a hat for that. So
I've told this before, and this is the last little story, but when my son Gus was very young, like maybe 2 years old, we were at Christmas at in-laws, and Gus was losing his mind, didn't get a nap. It was a terrible, terrible thing. I just left with him. Emily's like, just get him out of here. So I go, and he starts calming down in the car. He falls asleep. So I'm starving because I left before Christmas dinner. And there's a McDonald's, and I looked at this McDonald's. And, McDonald's, because I saw a bunch of cars in the driveway or in the line. I go get in line. I'm sitting there. It takes a while. I'm sitting there. Eventually, I get up there. I go, hello. They were closed. Like,
oh no!
Like literally, I look up, here's the thing: every light was off at this place. Like, how I didn't notice that every light was off.
But there was a line of cars.
There was a line of cars, and I was starving. And I had a kid in the back screaming, and he wanted McDonald's too. And then I said, but that's what I've used that example before. Like, we do follow crowds. It's in our nature. There's a crowd over there. There's a line over there. Let's get in line. And you know what? All those bears got in line this time 8 weeks ago, and that didn't treat them too well. So let's wrap this up in 10 minutes, Sonu. What's the latest on trade? Because last week we had something, we didn't have something, we had something, and by the time people listen to this, it might all be different. But talk to me about that court that no one ever heard of until last Wednesday evening. What's that?
I hadn't either, to be honest. So let me clear my throat. So no, this was a bit of a surprise, but at the end of the day, I think it goes back to America's a country of checks and balances. I think in a lot of ways that's why it works, and I would argue, as someone who's come here and chosen to stay here, like it works better than every other place. I'm biased because this is where I chose. This is where I chose to live, right? But look, checks and balances exist. So last Wednesday, I think it was Wednesday. Yeah, Wednesday night.
Yep. Same. They had NVIDIA earnings, and then like 2 hours later, this all happened.
Right. Yeah. You had the U.S. Court of International Trade striking down all of the IEEPA tariffs imposed by President Trump, right? Try saying that 10 times in a hurry. Now, IEEPA is the International Emergency Economic Powers Act. If you don't remember that, it does not matter. It was passed in 1977 by Congress. So it allows the president to, quote unquote, regulate international commerce, regulate trade, right? After, then this is key, declaring a national emergency. So it was under this authority, IEEPA, that the president imposed the fentanyl tariffs. This is back in March, China, Mexico, Canada. Remember that? Feels like ages ago. And the Liberation Day tariffs was also based on this IEEPA authority and the reciprocal tariffs, right? That was in response to, they're ripping us off because of trade surpluses. China, Mexico, Canada. It was in response to fentanyl tariffs, right? The court basically came and said, these emergencies used to justify these tariffs are not valid, at least within the scope of IEEPA, right? The immigration fentanyl tariffs imposed in China, Canada, Mexico, they said it doesn't deal with, quote unquote, deal with the emergency cited by the administration. And then chronic trade deficits, I'm laughing as well when I say this, but that was used to justify the Liberation Day tariffs that don't meet the test of, quote unquote, unusual and extraordinary threat. So all the ruling of state by the appeals court doesn't mean the appeals court agrees or disagrees with it. What was interesting is for about, 20 hours, 16 to 20 hours?
Something like that.
It was like the federal government couldn't collect tariffs. So I was like, wait, is everyone going to just get imports on that day or something? Or, do they apply for refunds? Because if this ruling stays, if the appeals court, it's going to go to the Supreme Court. But let's say if they all agree with, this IEEPA authority was misused and so everything has to be canceled. Liberation Day canceled, right? It's crazy because then businesses can technically claim refunds for the tariffs they paid in March, April, and May, right? And the government is collecting a good bit of revenue. Over the first 100
Sure.
days, it collected $35-40 billion more than they did in 2024. And, that all has to be reversed. The question is, who's going to send these refunds out, right? So it's all a mess. But the reality is, look, the tariffs are not going away. It goes back to what I was saying at the beginning. It's not like the taco trade assumes we're going for 2% average effective tariff rates. Maybe that doesn't go up, or it feels like that's the case, right? But it's probably going to go up to 15-20%. The president can use other authorities. There's something called Section 301, Section 232, Section 201. So 232 is basically national security-based tariffs. That's what they're already using for auto, steel, aluminum, timber, chips, electronics, pharmaceuticals. But the thing is, there are a lot of procedural hurdles. You have to do an investigation. There's a comment period by the public. Some of the stuff can take 7 to 9 months to complete. And, that's not the administration could have done this in the first place, right? Used all these different, number soup of authorities to do the tariffs. Instead, they said, oh, we're going to go fast. And we're going to use IEPA and declare an economic emergency. We'll see if the court ruling stands. But what it does, I think, even if it does stand, who knows? I think it's a coin toss whether it's going to stand or not. It takes away the president's tariff dial, right? Like one day it's not like, oh, I'm going up to 50%. Oh, I'm going to 100. I'm going to 120. I'm going to 150. That may go away. And the other side is now if you're another country, if you're a country like, forget the UK, they came to some sort of agreement, but any other country, the European Union, China, what are they going to do? They'll be like, wait a minute, we're going to slow walk this stuff. So I don't think we're going to get any real meaningful quote unquote deals before July. But then again, we can barely get a phone call between the U.S. president and the Chinese premier, right? I think this week that was like,
we're hopeful.
Who's going to call? Right? Do we have a call? Is a call scheduled? But that's a crazy thing, right? Going back to what you said at the top, May was awesome, and it was partly, yes, the taco trade and that nonsense was going on, but it was also earnings, and there was no recession. There's no sign of a recession, I should say. Anytime, the labor market's hanging in there. And then last week we got solid NVIDIA earnings. Again, you were teasing me the other day about, I said it's a surprise, and you're like, well, it really wasn't a surprise, but maybe it shouldn't be a surprise anymore.
The line I've used with media: death, taxes, and NVIDIA beats on earnings. Like those are three things you can kind of, live by, I guess.
Yeah. But all of that kind of like poof disappeared, right? Because we got this court ruling, and then market surge. Like I think Russell 2000 futures are up like 2% or something. It gave all that back.
Yep.
And that was before the market opened. It was up 2%. And then during the course of the day, I think people came to the, to the realization, nicely put, that, tariffs are not going away. Right? That's the reality of where we are. But I think the uncertainty or the tail risk of tariffs going from 10 to 100% over the course of a weekend, hopefully that's gone away. Or maybe, who knows? Maybe that comes back if the Supreme Court says, the president can, after all, use IEPA authority. And then we're back to the whole, weekend noise around tariffs. And, I don't like the deal, or I do like this country, I don't like that country. So they're getting more tariffs. You get tariffs, you don't get tariffs. But anyway, long way to go. You'll see.
Well, and it'll probably change.
I wish we can go 20 days without talking about tariffs.
Well,
or without the tariff rate changing. And after the China pause, I was like, I think all of us were probably like, okay, maybe now we just sit back, wait for July 4th or 5th or something, because that's when the 90-day pause ends. But then we got the court ruling, we got the 50% steel and aluminum tariffs, and who knows? But
I'm going to do one thing here. Here we go. Okay, good. I got this pulled up here. So here's something that's interesting. I'm going to change gears for a second. We're probably about near the end. I'm calling this the Rocky Balboa market, and here's what I mean by that. If you look at this year, we've had some down days. But the day after a down day, the S&P's bounced back in a big way this year so far, and this is as of, I guess, June 2nd. The day after a down day, the next day is up 0.22%. Okay, what's that mean? Well, we're going to share this on the YouTube channel to kind of show. So this is one of the best years we've ever seen in terms of bouncing back after a negative day the day before. 2020 was the best ever, up 39 basis points a day after a down day. Then you've got 2009 in there. Now 2008's in there also because that was a volatile one. And then 2003. Okay, so, it's early. I get it, but I think this is kind of caught my attention. I think Bespoke wrote some data, did some stuff on this. Shout out to Bespoke. I did my own number crunching, but
that's
go
been
ahead.
happening intraday as well.
Yeah, that's very true. Just on Monday was a perfect example. Monday futures were down, blah blah blah. Then you kind of get busy and you look up and we're up again.
It's all green.
we're all green. And Friday was down. That was down only 1 basis point.
Sure.
I get it, but at the same time, that's just, I guess, and again, another sign of, in my personal opinion, of a structural bull market. It doesn't mean it's going to go straight up, but you tend to get buying on the goalpost days, Friday and Monday. If you see weakness those days, that usually happens in bear markets. We've seen weakness on those days, during volatility in March and April. Those days are weak. Now those days have been a lot better. And again, just more clues. I think things are coming around. So we are, at the top of the hour. That doesn't matter to anybody. Not much. What do you want to kind of finish up with here, Sonu, in like 2 or 3 minutes?
Maybe we'll finish up with the economy. We got disposable income data last week.
Mm-hmm.
Right? And I know you like that chart. Josh, I'll share that chart with you. It shows different bars of disposable income, personal income, things like that. But look, disposable income, which is aggregate after tax income across, across the economy. It's got everything: Social Security payments, labor compensation, wages, Medicare, Medicaid, interest payments, dividends, all of it, right? Business income, all of it is included. Last month, it was up 0.8%. Last month, I mean April, actually. So April, 0.8%. Now, 0.8% doesn't sound like a lot, but trust me,
Annualize
for a month,
it. Yeah,
for a monthly increase, that is massive, right? You annualize it, it's 10.6% annualized.
Right.
Last 3 months, it's up. Disposable income growth is up 10% annualized. Now, this was almost entirely because we got a big 7% month-over-month increase in April because of Social Security payments, right? Social Security payments usually go up in January because there's a cost of living COLA, as they call it, cost of living adjustment that's applied. But the jump in April is because something called the Social Security Fairness Act, which took out provisions that basically cut benefits based on work that was not originally subjected to Social Security taxes. So it's not like people's Social Security checks went up in value. It's just that more people started getting it, right?
Okay.
But even if you exclude that, take that out, aggregate compensation growth across all workers in the economy, that was up 6% annualized in April. Last 3 months, 6.1% annualized, right? And crucially, all these numbers are running ahead of PCE inflation, which is the Fed's preferred inflation metric, the Personal Consumption Expenditures Index, inflation index. So you have real wage growth. Headline PCE over the last 3 months was up 2%. And like I said, last 3 months aggregate compensation growth is 6%. Take the difference. Real income growth is running, 3.5%, 4%. That's really strong, right? And, you talk about, what drives the U.S. economy? It's consumption. Consumption did ease in April, but that was because goods consumption pulled back. Why? I think that was just a reversal after the big surge in good spending. Look, even consumers are front-running tariffs, right? And people probably bought more stuff in March, and then April they bought less stuff, right? Services spending is still strong. We'll see if that pullback continues in May and June. But for now, aggregate income growth is still running pretty solid. And ultimately, it tells you the labor market hasn't broken, because where does aggregate income growth come from? It comes from people getting jobs, maybe working more hours, and getting salary increases, right? So all of that is working together. That's why you're seeing aggregate income growth running pretty strong. And
Sonu,
that's the thing to keep in mind.
We might have a first in a podcast. Emily's down here. What is up? They're here already? Oh man. So we're getting some work done in our basement. And they were supposed to call me before they arrived. Apparently, Thomas and Galbraith is here to put a new sump pump in my basement. But
are they kicking you out?
I think they're kicking me out, but it worked out because we're literally at the end of the podcast anyway. This is a good way to make us stop. So, listen, there's a lot of things going on out there. We really appreciate everyone continue to listen to the Facts versus Feelings podcast every single week. There's going to be more trade stuff to probably talk about next time, but hopefully we're sharing there are some real positive things out there as well. This was episode 138 Carson's Facts versus Feelings with Ryan and Sonu. Why bulls love tacos. We'll see everybody. I know. I watch Sonu's face every time I say it. He can't not smile when I say that. So, all right, I have to leave my basement because apparently the plumber's here.
With that.
The plumber's here, as they say. So yeah, I'm helping our economy. This costs a lot more than I ever would have expected, by the way. So,
as much as the toaster? No.
Yeah. Oh no, but hopefully this one works at least. All right, see you by next week. See you. Thank you. Take care. Bye-bye, everybody.
Information provided on Facts versus Feelings with Sonu Varghese and Ryan Detrick are for general information only and are not intended to provide specific advice or recommendations for any individual. The statements and opinions of show guests may not be reflective of CWM LLC or its affiliates. Past performance is no guarantee of future results. All indices are unmanaged and may not be invested in directly. Investing involves risk, including possible loss of principal. No strategy assures success or protects against loss. To determine what may be appropriate for you, consult with your attorney, accountant, financial or tax advisor prior to investing. Guests on Facts versus Feelings are not affiliated with CWM LLC.